So stocks are like a ownership in a company, which has higher return, but it's a higher risk also. And on the other hand, bonds are like loan to a company or a government. It has a lower returns, but it's more stable. So we can also say stocks are like a roller coaster. It has a thrilling but bumpy ride, and bonds are more like a train, steady and predictable. A mix of both helps balance your portfolio. As per Jack Bogle, father of index fund and founder of Vanguard, he says you should invest stocks and bonds, as per your age. Like suppose you're 20 years old, you should invest 20% in bonds and 80% in stocks. And if you're 30 years old, invest 30% in bonds and 70% in stocks to make it more stable. Early you start, you can take more risk. Late you are in the game, you want to make a stable investment and stable portfolio, and you don't want to take too much risk. Now you know the difference between stocks and bonds, and you're ready for investing. So let's take an example. You wanted to invest first $500 between stocks and bonds, and you wanted to allocate 80% between stocks and 20% between bonds. Even your 80% stocks, you should split between US market and global market. For example, 80% of 500 is $400. You should invest $300, which is 60% of your total allocation in US market, and another 20%, which is $100 in international market. So even within the stocks, you should diversify more between international and US. Another 20%, either you can invest in bonds and you can split between bonds and cash reserve. That's your personal choice. How would you like to, go for it? You can look at the history, how they performed in the past. I'll create another video which will show what exactly the allocation should be, what 60% of index fund of US market I would buy, and what global index fund I would buy, and also the bonds. I'll paste a link here. By doing this, you're not only investing wisely, but also setting yourself for a long-term success. Another thing I wanted to show is, beginner tips that I've learned along with the investing after reading a lot of books. So always start small. Don't worry about investing a lot of money at the time. Just invest small. Even a $50 a week can take you a far in 30 years or 20 years. Diversify. So never buy a single stock like Tesla, Microsoft, or Apple. Diversify. Buy for whole US market or global market, or split between both of US and global market. And always think long term. Don't panic when the stock goes down, and stock market has gone down many times in 2008 and then COVID. But if you look at the average return of S&P 500, it's 9%, in the history. So don't panic and don't sell when the market goes down. Another is reinvest your dividends. So most of the platforms, they have that feature. Most of the index funds, they automatically invest your dividends in your portfolio or index fund. So that's the key, and there you have it. Investing your first $500 in stocks and bonds, it's very easier than you think. It's all about starting small, staying consistent, and learning as you go. And if you find this video helpful, give me a thumbs up, and let me know your strategies. How would you invest? And comment below, how would you plan to invest your first $500? How much you would do in stocks and how much in bonds, or maybe something else. I would love to hear about it. Now, thanks for watching. I'll see you in the next video. Happy investing, guys.